What's up, guys? Oil is up and over $100 a barrel. So, just wanted to hop on here for a minute and kind of talk through these things because this is a situation that we've been watching here against all odds for a while. Something we've been talking about monitoring. A while ago I put up that cycle chart. So if you go to my pinned tweet on Twitter, Jason P138, you'll see there's a cycle chart, and that cycle chart is basically showing you that the way the cycle works. So the cycle usually works gold, copper, oil. So obviously let's dissect that a little bit more. If you look at gold, you see gold starts to move, then you see everything inside the precious metals complex, whether it's gold, then you get into I'll actually go in order. So it's gold, and then you see some large cap mining stocks start to move. This cycle it was AEM. AEM started to break out. I think that was the first big cap name that broke out to the upside. So that was a really nice move in the gold mining space. And then we move into silver. Silver starts to catch a bid, then platinum, then palladium, then the silver miners, then the platinum and palladium miners, and so on. So these all start to catch a move. Awesome stuff. So next thing we're riding that. Basically, the last 2 years we've been a part of that cycle, making a lot of money on the mining trades. Thank you guys for joining me. A lot of us, a lot of my subscribers have made a lot of money in the mining stocks over the last couple of years, which have been great. Huge move. But the cycle always moves and shifts. So what's next? Then we talk about copper. So when I look at copper, that's something where we're looking at copper, base metals, industrial metals. We're looking at copper starts to move. Then you see iron ore start to move. Then you see aluminum, steel, even lithium starts to move under that process. So all of these things start to move as well. Nickel, lead. These things have been big movers. We've highlighted a lot of those stocks at Against All Odds Research as well. If you're on YouTube, the description actually has a link to my Against All Odds Research newsletter channel. So if you guys go to that and want to check out a bit more, you can. But anyways, that starts to move. Then the last part of the cycle where we're at currently is crude oil futures. And what's up, guys? What's up, Blake, Will, Evan? How you guys doing? Hope you guys are having a good night. So if you're looking at oil, then that starts to move. And so what's inside of that? And so what we've been highlighting a bit has been the agribusiness sector. So if we're looking at agribusiness, we're looking at stocks like John Deere. Look inside of the MOO ETF. There's a lot of good names inside of there. So John Deere is one of them. Scott's Miracle-Gro, all of these things, fertilizer companies, industrial companies that work on farmland and so on. There's a bunch of good agribusiness stocks inside of there. So definitely look inside of there. You're going to find some great names that you might want to be a part of. And then shipping, shipping usually works before crude oil. So we talked about it last year. And last year in 2025, basically it was December, and all of a sudden the shipping stocks started to move. And we started highlighting them, talking about them. Be Wet ETF, I'd make a million jokes about that. Go home and tell your girl to be wet, whatever it was. Made a lot of jokes about that over time, but the ETF is a good thing to look at to find shipping rates. It basically takes a bunch of different shipping rates all over the world and kind of puts it into one ETF, so you can kind of see where shipping rates are actually moving. So the shippers start to take off. And then we got companies like Fro. What's up, Riley? We got companies like Fro. We've got companies like Tank, all these other names that are inside of there, and you guys have seen those in the portfolio this year, have been start to move, and they make really big moves. I highlighted even on here, for just everybody to see. I've highlighted some of these base breakouts and some of the times we're going to be buying them. Boom, big move starts happening. Really great stuff. Hasn't stopped. Things like Fro Frontline has been a huge mover. It had a huge 20% week, and then it's just continued to move. I don't think that thing's going to stop. I don't think the shippers are going to stop. I don't think the dry bulk shippers. So there's two different types of shippers. That's why you'll see two different ETFs. So if you guys want to track this yourself, you're going to look at BDRY, BDRY. That's the ETF for dry bulk shipping. So, things like the grains are going to be shipped through that. And then Be Wet. That's going to be where you have oil and other energy products being shipped through. And so those are the two different shipping rates. So you can keep an eye on them using that. And then you can buy the individual names inside of those sectors, which have done really well and probably will continue to do well as this situation continues to evolve. Now we're having oil up over $100. So what exactly does that mean? So you're basically looking at the main issue being the Strait of Hormuz. So Iran war starts to happen, and this is the reason why we watch price action, guys. A lot of people always talk about trading in a bunch of different ways, right? There's fundamental trading, there's position trading, there's look at the flows, there's let's just follow Nancy Pelosi. There's a bunch of shit, and a lot of it's bullshit. When you look at price action, though, this is an actual thing that tells you what the insiders are doing as opposed to what they're saying. We have, for example, I got on, and if you go to my page, you'll see I posted earlier today on Jason P138 on Twitter. You'll see I recently posted the time when I got on the morning show and talked about Venezuela. It was the day the Venezuela news event happened. So it was Sunday we took over Venezuela, and basically Donald Trump said we took it over. And so the price of oil didn't go down that day on Sunday. That was very interesting because Donald Trump could get on TV. Now, remember the last year. Now, look at this chart. If you go all the way to these peaks, every time oil would go up, basically since Trump's been elected, you would see him come in and go, oh, gasoline prices are too high. I want gasoline under $2 a barrel. Or sorry, $2. Yeah, $2 a gallon. So he would keep knocking down the gasoline price over and over again. And everything he said about gasoline would knock down the gasoline price. And at the end of it, it was, now we've taken over Venezuela. We have their oil. He straight up got on TV and said something about oil, which was pretty amazing, pretty ballsy for a president to actually say, because over the years, and if you grew up like me, I'm 40 years old, 2001, you had 9/11 happen. Once again, we didn't say anything about oil all those years. Weapons of mass destruction, making the world safe for democracy before that. There's a bunch of things we've always said. And this time it was, we went in there for the oil. And so, boom, the oil price actually bottoms that day. And on Monday, I bought oil right out of the market because it actually held that level and got back above that 10-day moving average, which is something I look for. So basically, it's not anything special. It's basically so you can put a stop loss in it. So we call the bottom at that point. Oil starts to move up little by little. The energy trade starts to break out at that time. If you guys remember, if you look at XLE, that starts to break out. And then this thing starts to take off. And slowly, it kept moving. Now, once again, why did it keep moving to that degree? So answer is easy. And that answer is something like, well, if you have oil moving and you have some situation happening somewhere, let's say Iran, there was a possibility of this happening. You also saw news beforehand, if you were paying attention, that we were starting to talk to Russia about possibly getting their oil and so on. So there seemed like there was a setup here to go after Iran at some point. And somebody else knew that. There's always insiders that know things, and that we only see that in the price action. So boom, next thing you know, crude oil starts to move up slowly, then very quickly. In this situation, everybody thought it was another news event. It'd be very short-lived. We'd have this pop in oil and then it would come back. This Iran situation is a lot bigger than people think. There's a really great, and you guys, please repost for me and share. I cannot really do that today because it's just me by myself. But the Iran situation is very interesting. If you go back to the 1950s, you had Mohammad Mossadegh in Iran. So basically, Mohammad Mossadegh was actually very beloved by his people at that time. People really liked the guy. People liked Iran at that moment. But we went in there and we were like, hey, we kind of need, you guys to work with us on oil. Now, remember, when I talked about Venezuela, part of the thing why it wasn't going to be a big catalyst for oil was the fact that refining Venezuelan oil is very different than refining other oil. And Iranian oil is probably one of the easiest and best oils to refine. So this is a big get. So back then we went in, we wanted the oil a little bit cheaper. We wanted Mohammad Mossadegh to work with us. He wouldn't. He wanted the oil for the Iranian people. He wanted to trade it for whatever price he wanted to sell it for. And we created campaigns and so on, got him thrown in jail, installed the Shah of Iran. And then next thing you know, we're getting that oil once again. So that happened for a long time. not too long ago, that's kind of changed, and so we've been trying to get into Iran in some way. So this is, this isn't me making up this story. There's actually CIA documents of them talking about this entire thing, with Kermit Roosevelt being the main go-to guy, which I think he was the great grandson or grandson of Theodore Roosevelt. So if you look at that, I think it's Operation Ajax. I might be saying that wrong. If somebody could cite me on that, please do. But Operation Ajax is what I think it is. But also, there's a great book on that called Confessions of an Economic Hitman. And so if you read the book Confessions of an Economic Hitman, it will actually walk you through that situation and many other situations that happened ever since. And it will give you a great feel for what's going on in geopolitics and the oil market most years. One of my favorite books to understand that stuff. So as that has all happened, now we're in a point where it's like, okay, well, we're trying to get into Iran, but this isn't going to be a small situation. Like, everybody thinks it's like, it's going to be like Venezuela, where we're going to walk in there and be like, get out of here, dude. And they're just going to walk away. And because we're America and we have this very, large military, they're just going to back up and say everything's okay. They're going to fight this thing. This isn't going to be a short thing that's short lived. And next thing you know, we're through it and everything's fine. This is going to be a long situation. And not to mention, they control major oil routes. So that is also going to be a major thing. So none of this is small currently. This is a very big event. And so, if we're looking at oil to be up here, it could sustain. So I'm not saying like, go out there and buy oil today over $100. I'm saying, like, for people like us who've traded it, for me, I'm a trend follower. I'm going to run a trailing stop. I'm going to run an exit signal. I'm going to get out when those happen. Trailing stop currently continues to move up. It's around $83 currently. So, it's the price of it's far above it currently, but we bought all the way back at 55. So I think we're doing just fine. And I'm going to let it run. And once again, just like silver, as you guys saw, from 25, it went from 25 to about 110, came back, stopped me out about 91, 92. It's going to be the same type of situation with crude oil. Commodities, they make big moves. The goal of it is to catch the meat of the move. I do not care about trying to catch it perfectly at the top. I would love to. Like, I'm not saying, I would hate catching oil perfectly at the top. I would love to trade it. I bought it very low. I would love to be able to know that point where I'm going to sell it perfectly at the top. It's going to hit, let's say, 130 or 150 or whatever. I'm going to sell it perfectly. It's never going to happen. And why isn't going to happen? It's not that it's not possible for me to do it on accident. It's impossible to do that consistently. That's the difference with trading well and then trying to trade well. Trading well is doing things that I don't want to fucking do, to be honest. I would love to sell oil today, take my profits, run. That sounds great. But if that's my strategy, I would have done that when I bought it back there at 55. It would have went all the way to, let's say, 70. And I'd have been like, I'm taking my profits and running. You can't do that if you want to catch these big moves. And so right now we're in the middle of a big move. I think it's going to continue. And I think we need to watch it across different things. So part of it is getting into things like gasoline. How's gasoline doing? Well, gasoline looks in a very sustainable uptrend. That is a new 52-week high that we hit recently. Usually 52-week highs lead to trends. And so now that we're seeing that we're in a bullish trend, granted, people are going to say that's parabolic or whatever. I mean, it is. Don't get me wrong. It's kind of like when people would say that about silver. It is parabolic. I know that. I can see that shit. Everybody in the world can see that. However, it was parabolic at 50 and it made it all the way to 110. So where does gasoline, where does heating oil, where does oil end up? Nobody knows. And anybody that gets on here that tells you they have an idea, they're bullshitting you. This is human psychology right now, reaching for as much oil as they possibly can, trying to buy that shit as heavy as they can so they can make, as much money as possible. And they're going to just continue to buy it all the way up. At some point, positioning is going to be very offsides. And when everybody's long, that's the point where it's going to come down. Not everybody's long yet. Think about silver. Like, it got very offsides. Everybody is long. People who were buying it at, let's say 50, 60, 70, 80, 100, 110, those people disappeared. They're not out there anymore at a certain point. So you get to 100, people didn't think silver was worth that. Next thing you know, it starts to come down. It's going to be the same thing with oil. It's going to get to a certain point, and there's not going to be a lot of people to do it. The problem is right now, and this is what started this trend in the first place. Everybody was short before it started. Everybody hated this trade. Where's energy? Everybody hated this trade. And I'll tell you why. Because it was fucking miserable, right, guys? Like there was nobody who really enjoyed it. You know, I explained this trade at the Portfolio Accelerator in Miami one way, and it's a terrible way to say it, but I don't know how else to say it because I'm kind of a crude guy and I've had a lot of life and weird experiences. And here's a weird experience. I'm at bike shows. So I'm about 17 years old. I'm at this bike show. So I used to ride BMX bikes professionally. I'm doing a bike show where basically what we do is ride ramps. Like think of X Games stuff if you guys are around that age range. So we ride ramps in front of people. And so we perform they were performing at the New York State Fair this year. It's one of my first times doing shows. I'm young. You know, I'm not as cocky as I am today. I'm not cocky, but just making a joke. But anyways, I'm not as confident as I am as I got older. Let's put it that way. So there's a mom at this show. So the mom comes up to me and she's like, I want you to sign these. And I'm making the universal sign for you know what. So she wants me to sign her boobs. So I'm like, 17. I'm looking at my manager. He's looking at me. I'm looking back at him like, is this for real? Am I really doing this? And he's just looking at me. Now, not to mention, she also has her child there who's got to be like 10, 11. And they're just staring at me like, are you going to sign these things or what? I look at my manager and he just goes like, that's the job. And so I pull out a pen and I'm like, back then I couldn't really sign my name very well. So like I'm signing it like now I sign signatures like boom. I was signing it Jason on one and then Pers on the other one. And I looked at my manager like I felt like I was like, gonna just get struck by lightning or something. And he goes, that's the job. You're going to hell, so what? And so why that pertains to the energy trade, because I make weird connections and that's part of the thing I do. So why that pertains to the energy trade is all this choppiness here. What is my job as a trader? Like, what do I have to do no matter what when it doesn't feel good, when it feels odd, when it feels like some kid staring at me and I'm signing his mom's tits? What exactly do you have to do as a trader? You take the trade. Where's the breakout level? I'm not like, this isn't exactly the breakout level to buy. We were looking more over this area, but like, this is the big breakout level is 50-50. So what do? You hold your nose and you buy it. That's the job as a trader. And so you buy these things and it made money. But there was a lot of times where the job was buying it and it came right back, or buying it and it came right back, or buying it and it came right back. So sometimes that's going to happen. So what happened during that period of time? Everybody hated the trade. If you look at the short interest, look at FINRA short interest, you look at even the oil futures, you look at the COT report, everybody, the funds were all shorting it. Small speculators were all shorting it. Random people were shorting everything possible. A lot of funds were shorting energy stocks altogether, the ETF, whatever it was, that kind of continued. And that led to a lot of volatility and a lot of stress in that market. So what happened after that point? Then you have the other point where it's the old technical analysis phrase, the bigger the base, the higher the space. So we got a big base, we're blasting off to space, and a lot of people are saying this could be done. That's the thing to me that blows my mind when I really think about it, is that people are actually saying this thing could be over right here, right now. And this is something that I want to look at. And this is something like I talked about this in my report on Friday. Sorry, guys, I'm just getting over a cold or a flu or whatever it was. I felt like I was going to die. Anyways, talked about this on the report on Friday, and it's visualization. Like if you're a trader, a person generally, you have to visualize things. Like I've been in a lot of weird places, let's put it that way. Places that you don't want to be in, and places in life where you just end up because you've made some mistakes. And so when you're in those places, like, how do you get out? Well, you can only escape with your imagination. And when I was younger, and I was like, I wasn't the best in school. Like, I'll be honest with that. I was definitely very busy riding my bike, and I was only thinking about riding my bike most days, especially towards the end of the year where grades didn't really matter because of I wasn't playing sports at that point. So I wasn't the best in school at that point. I just didn't care. I didn't try enough. I didn't do things, but I was also working on something else. So I remember my science teacher came over to me, and he grabs my notebook, and he looks at it, and he looks at me, and he looks at it, and he just starts ripping it up. And he's like, you need to really apply yourself. And the reason was that I was writing, I would draw ramps, I would write bike tricks in it. I was, obsessed with what I really wanted to be doing. And he was always like, you need to apply yourself, you need to do something different. But I look back at those moments of all those things happening to me and being able to think my way out of it and think of something new or what I wanted my life to look like later as something I use now in trading. Or still use that in life, obviously, but in trading, it's the same thing where I want to think of what could be. Not that this is going to change anything, not that I'm not going to hit my stop loss and get out of this trade if this moves the other direction, but I have it in my head that energy does have the possibility, because I do look at the cycles. It's the reason why that cycle chart of gold, copper, oil, I've used it a million times. You guys have seen it a million times. Probably every single person on here tonight has seen this. So when we're looking at something and trying to go, okay, what's next? I'm looking at oil and saying, that's probably going to be next. Doesn't mean I'm buying it. Doesn't mean I love oil. It just means that I'm watching it to be next. And I'm going to set buy signals and be ready to buy this thing as it happens. So same thing here, looking at gold, I have it in my head that it's a possibility here, because I remember the same type of things that people are saying about energy today. It's overbought. I hate that term. It's a ridiculous term to say when a trend is new. You can say that when you're in a range. Overbought, oversold, fine, whatever. I don't even like it for that, but you can use it. But when we really start to break out, everybody goes, this is overbought. Every single trend you've ever seen happen that's been worth a damn has been overbought. Every single one at the beginning. And everybody said this one, like gold was the most overbought it was in history at certain points. Like people have pulled that out a million times. Gold has had 14 straight months up. That's crazy. So people go, this is overbought. This can't continue. I think the RSI I don't look at RSI much, but somebody said this recently. The RSI on XLE was above 70 on the weekly. So that's big for people, and people go, oh my God, that's ridiculous. You can't possibly go any further from here. And that's wild to me. But it was the same thing with gold. You can't possibly go any further from here. I remember it was 2,500 and everybody was like, that's it. Gold is done. It's a bubble. And people now are saying the same thing about energy. That's it. It's done. It's a bubble. If oil just sustains around these levels, let's say 85 to 105, and it just chops back and forth around those levels, I would say that's an area where that would be very sustainable for these energy companies to continue to make money. So they would just continue to make money in that type of a scenario. So I do think that's a really big thing to think about here, which is these companies look good. It's very similar to the gold miners when gold started going crazy. Yes, some people, here's a big question. Everybody goes last week, oh man, the energy stocks didn't really move with it. One day does not change anything. Like sometimes there's going to be divergences, especially in the commodities market. There is not a perfect correlation in anything in the world. There will be days. It's kind of like when people talk about the bond market. I think I brought some of those charts. So when people talk about the bond market, they go, well, oil's moving and the 30-year yield isn't going up with it. So therefore yields are done, or bonds can go up with oil or something. It all sounds really crazy when you say it out loud, because none of that's going to actually happen. Because when you start to go, okay, I'm looking at, let's say, the 30-year yield, and I'm looking at oil, I'm seeing oil really move. I will tell you that if oil stays up here, this 30-year yield is breaking out. The government can try to suppress it however they would like to, but the 30-year yield is breaking out. I promise. And TLT will be breaking down if oil stays up there. If XLE continues to trend the way it is, TLT will break down as well. The only way that happens is if the opposite happens. If oil just crashes from here, I don't think that's going to happen. And if energy just crashes from here, people will start to run to bonds. That will happen very quickly. I don't think that's happening, but when and if that happens, then you guys know how to pivot and make that trade if you have to. But currently, the path for yields is probably higher. The government would have to do some real wild stuff to make that change, because what we're going to see going forward is going to be CPI reports are going to have higher inflationary numbers going forward. PPI, same thing. We're going to see the inflation numbers ticking up and continuing to move higher, which is going to be very, very bad for inflation. Like, remember, one of the biggest inputs, like, why haven't we seen inflation take off? Like, we've seen gold move. Okay, well, gold isn't really used in everything. It's used in some things. Then we see silver move. That's used in a lot of things, but not everything. Then copper. That's pretty significant. So that's made a big move. But what are we waiting for? So a lot of the numbers, one of the biggest inputs is things like oil. Gasoline is an input. So if you see all of these inputs basically across the board, if silver is up near $80, if gold's over 5,000, if oil is around $90, $100, do you think the CPI report is going to go down? It might not do much this month. Like, maybe it doesn't do much and everybody celebrates. Oh my God, see, the CPI report didn't do anything. You inflationistas, or whatever the hell they call people. I mean, really, I don't really care about the CPI reports. I look at the actual price of things. If I'm looking at oil, if I'm looking at silver, if I'm looking at copper, I am telling you that the inflation is here. And you can't argue that. They can the thing about CPI reports that people don't understand is they can manipulate the hell out of these things. So CPI reports, when coffee prices, for example, went crazy a couple years back, they just took it out of the CPI report. They put its very small weighting of it inside of another thing, and that was it. So coffee changed. And then they'll tell you, we didn't take coffee out. They didn't, but it's just a very small weighting now. Same with, anything you've seen over the years, whether it's sugar, lumber, whatever it is, like, they make them smaller and smaller as they start to put a lot of pressure on the CPI reports. I don't doubt one day we'll even see oil change so they can make the CPI report look a little different. So that will continue. But what you can do is continue to look at what matters. And what matters is things like the actual commodity prices. I know this sounds crazy, guys. I know I'm like really talking out of my mind here by saying this, but look at the damn commodity prices over everything else. Put more weight on looking at crude oil futures, looking at copper. If you want to know where inflation is going, see what's happening, because it's not like they just take all those commodities and then go, this is what the CPI is. It takes a while for those commodity prices to actually get into the things that that are in the CPI. Like, you don't see it. It doesn't show up at stores immediately. Here's an answer to that. For example, gasoline prices. Gasoline, oil is up 100%. So gasoline looks like it's up, I don't know, let's say 60% or whatever. They can't just go in tomorrow and go, okay, gasoline prices are now 60% higher. What they do is they do it slowly, 10 cents here, 20 cents here, 30 cents here, and so on. Like, they're probably actually, I'm saying that kind of crazy. They're probably never going to do 30 cents in a day, but they're going to do it slowly over time. And then the national averages start to jump. And then once those jump, at some point, those show into the CPI report, but they're not going to show up immediately because the CPI report is backwards looking. It's looking at last month. So as we'll get the, let's say the March CPI report, is going to look a little bit different. So this is why you want to always look at the commodity prices. But I want to highlight, certain things that we're going to be looking for before I hop off of here. And so gold versus commodities here, New York Stock Exchange versus commodities, bonds versus commodities. If we're looking at gold versus commodities, this huge move up here that came back a little bit. That's a big move. I wanted to highlight this because I haven't seen anything perform against gold in a long time. I mean, look at this move. This is going back to basically that bottom that happened in October 2022. Gold has outperformed commodities that entire time. So gold started to move up, started to make a huge move in 24, 25, and it's just been kind of in a parabolic trend ever since. Stocks, same thing. Started to outperform commodities in 2022, October, that October bottom that happened. Next thing you know, stocks are where you want to be, and they're making a lot of money. So now this is kind of rolling over. Very interesting. And then bonds, you haven't wanted to be in bonds for years. I've been the biggest, loudest, probably annoying bond bear out there. I've been shorting them since 2022 when everybody completely lost their mind on me for even saying there was a possibility of bonds moving down. And why in the world would anybody short bonds? Because they always go up. And granted, they weren't wrong. This is the other thing. If people always talk about how people make money. If you were, baby boomers were starting to invest in their 401ks, retirements, things like that, and that would have been all the way back in 1980s. So what happened in 1981, 1982? Well, yields topped out. The 30-year yield topped out. So basically, bond yields went down for 40 years, and bond prices went up for 40 years. So as that was happening, bonds were the place to be. You made money in it. Even when something like 2000 happened, the dot-com bubble, market crashes, dot-com bubble happens, bam. Really, really wild, But at the same time, you could have made some money in bonds. So the 60-40 portfolio was a way to be at that point. You wanted to have some stocks, but you wanted to have a lot of bonds as well. And so as long as you were in that, you made money over time. That changed in 2020. 2020 happened, and this is a thing I would have conversations with clients about. What do they want to do with their retirement? Well, I'd always say, well, this is a hard answer and something that people don't want to talk about. But stocks will probably, if the environment is inflationary and bond yields are rising, stocks will outperform bonds for a long time. Even the drawdowns, even the pullbacks, everything will continue. Stocks will be where you want to be over bonds. Commodities even more so, but I'm not going to tell somebody to start trading futures in their retirement account or trading in their retirement account. These are people that really don't trade that I'm talking about right now. So you wanted to be in stocks, you wanted to be in commodities, you wanted to be anything that was inflationary, and at the same time you wanted to be shorting the bond market, which was something that was very different at that time. So I think that same scenario, if oil is going to stay sustainable up here, bond prices, things like TLT, are not where you're going to want to be. You very long-term investors, you want to throw some in your retirement, great. I would suggest short-dated bonds over everything, because basically you're going to be holding that thing for a yield, and that's about it. But bonds are not where I want to be. I'm still short the 30-year bond currently. I've been short the 30-year bond for a long time. I don't see that changing, especially in this current environment. So looking at the oil price hitting single digits here. So this is just a good look at history. Oil price hits single digits. That's 1999. Dot-com bubble crashes. Boom. Money starts flowing into commodities. So why I'm bringing that up today is only for one reason, is to say, Russia-Ukraine war happens. What happens after that? AI makes a big move. AI is the place you want to be. Same thing back here. You go to the 90s. Hey, the internet's going to change the world. It did. Nobody was wrong about that. However, the stocks didn't just go up for 50 years. That's not ever going to happen. So the stocks came down. And same here. We had that big move. AI was a great trade. Things like NVIDIA made huge moves. A lot of these AI companies made big moves, or big companies that were tech companies that started getting involved in AI. They all made very large moves. But AI also has another thing that's important, which is how much energy do we need for AI? How much copper do we need? How much natural gas do we need? How much uranium do we need? These are real commodities that are going to catch a bid because of that period of time. So we're living in that period of time currently where we're using a lot more energy, and we need more energy. And then also we have a catalyst here. You could say Venezuela, you could say Iran. we do have a catalyst here that could shift this for a little bit. Now, I'm not saying that stocks are going to be a terrible place to be. I'm saying be picky about the sectors you are in going forward. Buy strength. Nobody likes to do that. That sounds terrible. We go to grocery stores as humans. You're not trying to go to the grocery store and find the most expensive product because it's breaking out. That sounds ridiculous. So you go to the grocery store, you find what you like for a good price. You don't want to buy the most expensive organic oranges in the world. You want to buy good organic oranges that are at a price that you like. So you do that. But in trading, it's different. You have to do a lot of things that you don't want to do a lot of the time. You have to buy strength. Why? Because that's saying where money is flowing into. Money is currently not flowing into big tech. Money is not flowing into the Mag 7 names. But it is flowing into other areas. International has made a bit of a pullback. We're going to have to see if that's going to continue with the war scenario going forward. But if you find areas with strength, energy is obviously one of them. Norway is obviously another place you could look at. Latin America was looking really good. It still looks pretty decent. But start to look at these areas that have been stronger than the rest of the market. Currently, the S&P 500 is down for the year. Look for the things that are up for the year, and you're going to make a lot more money. Obviously, the energy sector being the strongest one this year, up quite a bit already. So basically want to just highlight one more thing before we get out of here, which is this chart. So this isn't today, so we're not seeing like tomorrow when this chart updates, this is going to probably show this band really expanding here. So this is a monthly band squeeze. So as a technician, one of my favorite setups are Bollinger Band squeezes. I've back tested it. I haven't found a better setup that is more consistent. Sometimes you're going to miss moves because of it, because it's not always the best setup for that to catch everything. But what you find is quality every single time. So when you have a band squeeze, what that means is that there's no volatility. This thing has been kind of stuck sideways. This is monthly, so it's long-term looking. If you look shorter term, I'm sure there'd be more bumps. But when you see a monthly band squeeze, it's more significant. The longer the time frame, the more significant it usually is. So as you get this long-term band squeeze here, meaning there's no volatility, this thing is just chopping around, boring as hell. When that happens, you get a big breakout to one side or the other. Now we're hitting the upper band. Now there's not bands on here, but I've looked at this chart. It's hitting the upper band. Now we're ripping right through that upper band. Like today, we're ripping straight through that upper band and going straight to the upside. Usually that's when big moves have good momentum and will continue. So I don't know exactly where this sets up or where this ends up. I know looking at $100 oil is going to freak some people out. And I know there's going to be volatility. Like this isn't a straight up and down road. If that was the case, like trading would be very easy. However, most people underestimate how fast and how much momentum things can have to the upside. And this is one of those, like, most people would have thought, okay, well, we went from, 50 to 70. It's going to stop and have a pullback there. Went to 70 to 80. It's going to stop and have a big pullback there. And now today we're at 100. It'd be easy to say it's going to stop and have a pullback there. Everybody who says that, at some point they're going to be right. And they're going to be like, look how right I am. They're going to pound their chest how fucking smart they are. But they've been saying it the whole time, and they're probably not long in the first place. They might even be trying to short it. They're probably losing a lot more money. But the people who can really hang on and use a trailing stop or use targets, however you use that trade, however you trade, those are the people that are going to make the most money here. Because commodities are very different from other things. And this is an important lesson, which is if you back test stocks, for example, the S&P 500, if I get 4 days down in the S&P 500 and I buy that fifth day, if it's green, most of the time I'm going to make a little bit of money to the upside. There's a very high win rate on it. I think it's like 81%. It's between 75, 81. Depending on when you're back testing it. And I'm not saying like changing the parameters. I'm saying if you back tested it 10 years ago, if I back tested it last week, it's going to look a little different, obviously. But that's a high win rate. If you do that same thing with oil, you buy the fifth day on 4 days down. Usually that's the start of a trend. usually that's when a big move down is going to continue to start. So momentum begets momentum more in commodities than equities. And the only reason why I could think that's possible, and this is just me pontificating and thinking about my back testing, is the fact that there's a lot more news around equities than there are around something like oil. Obviously is in the news right now, but day to day there's going to be a lot more news on equities or Apple or Microsoft or any of these big names than you're ever going to see on any commodity in the world. And so you get these very big mean reverting setups that happen. So this is a momentum setup. This is continuing. I would still run, you got to run trailing stop. You got to still position size properly. You got to do all those things well. But I'm just saying, I'm not going to sit here and tell you I know where this ends up. I'm not going to sit here and tell you I know where this stops, but I'm going to tell you I am long. I'm going to tell you I'm long the energy equities. I'm long a lot of the shipping stocks, and we'll see where this ends up. So, all right, guys, I will probably have another video or something tomorrow. I just wanted to hop on for a minute, talk to you guys about this one because this is significant, seeing oil back up and over $100 again. Thank you guys for joining me. Please share this with anybody who needs to see it. I know a lot of people don't really know what's going on currently in the energy markets, but I think this is a good rundown and just a good beginning point. But I'm going to get into it more this week and keep writing about it, keep talking about it. Thank you guys for joining me. I know it's a Sunday night, but I wouldn't want to be anywhere but hanging out with you guys talking markets. I'll see you guys soon.